So good afternoon, everybody. My name is Maya Sims, CPA, and I am the founder of Your Virtual Asset, where our goal is to become one of your top 5 assets in your business by helping small business owners to make more strategic and informed business decisions and tax strategy decisions. So today, I'm actually going to be leaning more on the cash flow management and business decision side than on the tax side. I'm going to do a little bit of tax, but I'm going to try to fly through this. One, because it's a lot of stuff that I have for you guys, but we're going to basically talk about budgeting in a really easy way and using budgets as a tool and as a weapon rather than something that's telling you what to do. It's you telling your money what to do. So one of the things that we've noticed with a lot of our real estate clients is that one of the things you guys are really awesome at is making money, closing those sales, getting the commissions, but learning how to actually run your business and project your money to actually be able to forecast and understand like what happens to that commission check once it comes in the door, and why is it that I'm making all these commissions and my 1099 is real big, but my pockets are really light. So, trying to understand like how all that works and how to actually make it more strategic so that you are not reacting to the money when it comes in, but that money already has an assignment once it hits your door, and it's being stewarded in a way that is going to help you guys be the most successful with what you have, but then also help you to be able to project out and forecast and understand, okay, if this is where I am, this is how I can get to the next level and actually be able to make those kinds of plans. So, at the end of the day, we want to bring it on home so that you guys can see this information in a realistic way. So what I decided to do was to have a case study. So this is our fictitious broker, Alex Morgan. And basically Alex is single. She's a Georgia resident. She has a LLC that she files as a sole proprietorship, which is pretty common for most brokers. She doesn't have any children. We're not going to take into account retirement, health insurance, and that kind of stuff, mostly because it does complicate and it kind of facilitates those things, but we want to get down to like the bare bones, like the baseline kind of information, that foundational information. So we're going to kind of keep it simple. And then you guys, of course, with your own situations can kind of build on it from there. So in general, she gets about a 3% commission. Now, in this example, I went ahead and said that she grossed around $143,000 a year. And when I went back and kind of did the math, that means that she's closing somewhere between 13 to 14 houses, maybe slightly lower than that. And I looked at the Georgia average was like right around 11 to 12. So 12 to 13, it's optimistic, but it's not, unreasonable, right? And her average sale is in the houses that she's selling are kind of middle market, $340,000, $350,000 houses. So we're not talking about something super extravagant, right? At the end of the day, we want to know, okay, well, where does the $143,000 go? First, straight out the box, she's got her 30% that she's given for her commissions, right? So that's $42,900. Then she spends about 10% on her marketing, around 3.5 vehicle, 3 for her dues and tech, 1.5 for education, then maybe 1.5 for insurance. So at the end of the day, her total expenses are at $70,785. And that only leaves her with $72,215. That's just barely over 50%. So from the get, whatever she's making, she now has an understanding that she's only going to be bringing home about 50% of whatever it is that commission is, okay? And we're using percentages here on purpose. The reason that we're using percentages is because one of the concepts that I want to go over with you guys is actually based off of the book Profit First. So some of you guys may have heard of this book. Highly, highly recommend. So a lot of this is based off of those concepts. And we want to look at your numbers based off of percentages. Why? Because when you have volatile or, up and down kinds of income, you can't just count on flat numbers, right? You need to know, okay, well, what percent am I spending on this? What percent am I spending on this? That way, as the money comes in, you're putting aside those percentages as you go, instead of trying to constantly hit single numbers, right? Or fixed numbers. And these percentages I actually got off of Google, and I actually specifically asked for a typical real estate agent in the state of Georgia. So I was very specific when I was looking up these numbers to make sure that they did kind of fit what was going on here locally. One of the things to think about with these numbers is also going ahead and maybe trying to implement the profit first scenario, because it will help you in the long run. Now, generally speaking, when people implement profit first, just know that you do have to phase it in, because there might be some bills that come up before you get your percentages where they need to be. But at the end of the day, it can really help you to get a good, firm handle on your money and on where it's going, and how to preserve it. So next step that I want to talk to you guys about is around creating a financial foundation in your business so that you're actually running a business and not just owning your job. Okay. And at the end of the day, most of us want to eventually actually own a business, not just own our job and just work, constantly working and having a hustle all the time. And so one of the big things is you absolutely positively need to have a separate business bank account. That is absolutely essential. Number one, I'm not an attorney, so this is not legal advice. My attorney tells me I need to say that. But when you commingle funds, meaning if you make personal purchases from your business account, or if you make business purchases from your personal account, both of those are considered commingling funds. And when you do that, you actually pierce your corporate veil. So if you have an LLC, you have just thrown your LLC in the trash. Like, that paper is worth nothing now, the minute that you start commingling funds. And the reason is because if you go to court, the lawyer is going to say, oh, she commingles funds. She doesn't treat her business like it's separate from her. So because she doesn't treat it like it's separate from her, that legal document means nothing. And so if you do find yourself in the unfortunate situation that you might have to go to court, unfortunately, that can come back and bite you big time. It also can make it really hard when it comes to tax situations, when it comes to audits and things like that, being able to prove that a transaction is business versus being a personal transaction as well. One of the banks that we do, I don't want to say endorse, but we do recommend them or refer them quite often, is called RelayFi. So they are the official, they are the official bank for Profit First Advisors. And they're like the offshoot. It's founded by Mike Makalowicz and this other guy, and they basically have professionals that get certified in Profit First. So this is the bank that they recommend. It's called RelayFi. I think it's short for financial. And the main reason that they recommend it is because it allows you to automate the percentages that we just went over. And so that's why so basically as soon as money comes in, it goes into a holding account. And then that night, it sweeps into the different percentages automatically for you. They have a really good rate. What I'm finding out is a lot of these online banks, they're not actually banks. They're financial institutions. They're using a white labeled bank to actually do whatever their products are. And so the bank that they white label, they actually do have a brick and mortar, and it is out of Nashville, Tennessee. So that was one of the things that I did look up. But they let you have up to 20 accounts for 0 bank fees. Now, I do use this bank. There are things I like about it. There are things I don't like about it. I don't like the fact that I can't move my money instantly. So they do not have Zelle, right? So you cannot instantaneously move your money. You can move it same day, but they have a cutoff, which is like 5 p.m. Eastern. So if you don't move it by 5 p.m. Eastern, it moves the next day. So it's EFT rather than instant transfer. Okay, so that's one of the things I don't like about them. But there are a lot of things I do like about them, like that instant percentage thing. Love it. $0 for your 20 bank accounts. Love it. And these are true bank accounts, by the way. So one of the things I noticed with some other banks is that they have the envelopes, right? But when you want to spend the money on a debit card, you have to move the money back to the main account and then spend the money. This is different. You actually can put it into those various accounts, and then you can have a separate debit card for each one of those accounts. Mine are all digital. I have one physical card, but all the rest of them that I have are digital. And I can actually spend money on those cards. So for instance, my subscriptions, I don't swipe a card to get my subscription. So I have all my subscriptions on one card, and that one card is a digital card, and I just move my percentages in there, and then when it's time for the whatever subscription, then it just posts to that account. So it keeps it really easy. At the end of the day, the biggest concept I want you guys to understand is that this is almost exactly like, for those of you who know Dave Ramsey, this is like the envelope method, but it's digital and it is systematic. So, and it's specifically designed for business. Okay, so those are the differences. Okay, so the website is relayfi.com/pricing if you want to get the pricing guide. Now, they do have levels that do have pricing. So like, for instance, if you do a lot of wires, you can if you do a 2-day EFT, then it's no big deal. If you do a same-day EFT, if you do a lot of same-day EFTs, they do have a charge for that. If you're doing more than 6 or 7 a month, then I found that going ahead and going to the next level and paying the $30 a month, which is their second level, I honestly think it actually makes more sense to just go to the next level because it's the same amount in fees. But yeah, the biggest thing, just to remember about the whole thing is making sure that you are segregating your money into different buckets and using the percentages as your money comes in. That way, when the expenses, the goal is to get basically ahead of those expenses so that as the expenses come in, the money's already there because you've been putting it aside in those percentages. So in the scenario that we have, one of the things you want to think about, and I apologize for kind of skipping around a little bit. So we've established that 50%, 51% of the money that she makes is going to stay in her pocket, right? I think it comes out to be 51%. So that's going to stay in her pocket. So now she wants to look at, okay, well, how much money do I need to live off of? And so this is where you want to really look at your personal finances, and you want to, you want to have a long, hard, very sober conversation with yourself about what you really do spend and what you're spending on. So we're at her net of $72,215. Now, we're talking about, number one, you need to have a separate bank account. Oh, another option is if you're a prior military, if you're a veteran, or if you have family that are veterans, and they're willing to open up an account at Chase. Chase has really good benefits for veterans. Now, I don't know about everybody else, but I'm a veteran, and so they treat us really well. They give you a free business bank account. I don't know how many business bank accounts they'll give you for free, but I do know they give you free business banking if you are a veteran. I think they give us pretty much everything free except if you need physical checks. So they do have a pretty good deal. You want to get out of the habit of mixing your personal and your business income. That part it's more important for the legal side of things, but it also becomes really important because let's say that one particular year you blow up and you have all this money coming in. And now you, at the end of the year, you have to sit down with all 12 of your bank statements and all 50 to 100 transactions per month. And you have to figure out which ones are business and which ones are personal. And I don't know about you, sometimes I don't remember what I had for breakfast, let alone what I did 5, 6, 7, 8 months ago. You know, I spent $115 5 months ago. I don't know. Can you give me a payee? Can you help me out? I have no idea what that was. So by having separate accounts, you know that everything that's in that account is just business, and then it keeps you from having to disentangle that information when it's time to do your taxes. So you want to make sure there's a clean separation specifically for reporting purposes, so that makes that part easy. Now, for accounting and tracking, I am a Xero certified advisor and partner, and I'm also a QuickBooks certified pro advisor. Xero is actually our accounting software of choice, especially for startups and for people who are trying to look for a more economical alternative to QuickBooks. I've been with QuickBooks a really long time, since like before there was a QuickBooks Online, back in like the late 90s. But they're shifting. The truth is that their corporate initiative has come out. They are shifting their focus to middle market, which means, unfortunately, smaller business is kind of getting like the leftovers when it comes to all of their development. Xero is keenly focused on small business, and so their pricing point is better, and it's relatively easy to learn. They have a lot of tech, a lot of stuff to help you out. Their lowest level is $25 a month. But the big thing about accounting software is it helps you track your information. And even if you're part-time, the great thing about having an accounting software is that, generally speaking, if you're running everything to that business account, you connect your software to that business account, and it you can actually train it to automatically basically categorize your information as it comes in. So it's constantly syncing with your bank, and every time it syncs with your bank, it can actually learn how to categorize the information for you automatically. As long as it's a vendor that you've used in the past, it can continue to do that. You can also always upgrade to their $50 level, and you can actually automate they actually have an AI, and you can actually teach their AI, and it'll actually give you suggestions for vendors you've never used before. So that's also an option. You can also track any 1099s for, if you have any subcontractors that you are using, it will also allow you to track those and send like digital W-9s, things like that. And you'll be able to file those 1099s at the end of the year. This year was a beta year, so they actually let us do it for free this year, but I seriously doubt they're going to continue that forever. But even when they don't, it's usually like 10 to 20 bucks a year to file anywhere from 5 to 10 1099s. So it's not hugely expensive. It's very economical. But Xero would be my recommendation. And if you don't have accounting software, then I would say definitely try it out, and go ahead and look at making that change. It also helps you to build those numbers. So as you're looking at the different numbers, you can compare what you budget. So that first slide that had all the different percentages, that technically would be her budget. Now we can take that information, put it into an accounting software like Xero, and then as she's doing her actual transactions, as the system is posting them, she can pull a report maybe once a quarter, and she can see how is she measuring up to those percentages. Did she get taken in by the tech guy that was talking all this sweet stuff about how this new thing was going to make her life so much easier? It was going to program the AI. It was going to call her people for her, blah, 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 blah. And next thing she knew, she totally blew her tech budget, and she actually ended up overspending in her tech budget compared to what she's making. So those are the kinds of things that you'll actually be able to monitor by having accounting software. So it'll help facilitate your ability to monitor the things. And again, make sure that your money is doing what you want it to do, that it's not some, spur of the moment purchase that you might have made or been enticed by that caused you to get off track. And because you know your percentages, you can say, oh, wow, actually, I underspent in that area the first 2 quarters. So someone needs a new toy. Let's look and see what we can find that I would like to make my life easier. So those are things that you can actually consider by utilizing those percentages. So you load your budget, and then if you connect it to your bank account, it's updating the numbers as you go. And then you can pull a budget. It's called a budget to actual. You can pull that budget to actual and actually monitor what's actually happening with your money. And so you don't get to the end of the year and like, okay, I'm sorry, tax lady, you messed something up because that money is not in my account. I don't know who made that money, but it wasn't me. But by creating these budgets now and then putting them into the software, tracking your information as you go and spending, you know, maybe 30 minutes or plus some because you're still trying to figure out the stuff that you forgot. But instead, take that and spread it out over time and taking 15 minutes each week instead so that you're not overwhelming yourself at the end of the year, having to spend 5-6 hours a day, 2 days trying to untangle all your stuff and then trying to get it to your tax person so that they can, or if you do your own taxes, having to put all that, you know, now that you've gotten everything untangled, you still got to prepare the tax return. So then, you know, it just helps to take that stress off of you as well. As long as you're keeping up with the books and you're making sure that you're posting what they call posting the transaction, it actually updates the financial statements in real time. There was a time when I was not as fervent about going ahead and getting accounting software. So just being transparent about that. I recommend it now more earlier than later, mostly because of the hassle and the anxiety that I was seeing my people go through when they're trying to figure all this stuff out at the end of the year. And they have this random transaction, and it might have been that they paid somebody to go put out signs, or it could be whatever, right? But now here it is, February, and you're trying to remember something that you did last February or last March. And especially if your transactions are really spread out, it makes it worse because you're trying to remember something that you did several months ago. You know, if you have a regular job, you can go on to your regular job. You're not even thinking about you're not thinking about the mileage. You're not thinking about any of that stuff that you did 3, 4, 5, 6 months ago. And so by having accounting software, especially when it's the lower end software, it can help you to track that information as you go so that you're not having to go back and think about it in that way. Now, if you've never even had a close yet, okay, you probably want to wait until you at least, you know, pay for the accounting software with the close. There is one other level that Xero does offer, but they only offer it through accountants. And I at least know for our firm, we only offer it to our actual clients. That level is actually like $12, I think, a month. Might be 11. Is it 11 or $12 a month? But they only offer that level through an accountant. So if you have an accountant already, you can always ask them, or you can always sign up with us, and you know that's always an option. A lot of accounting softwares offer, you know, incentives to accountants. And so that was one of their incentives. And it is definitely a lower level. It doesn't do, there's some things that it doesn't do. So like it doesn't do accounts receivable if you're trying to send out invoices. It doesn't do accounts payable, that lower level. It's very baseline. It's meant to just be able to download transactions and then post the transactions. But it does still have all the budgeting. It still has like if you have multiple streams of income, it has a way to track that information as well. So it has a lot of features, but it is limited. It's not as extensive as the $25 level. So, you know, there's that. So her net profit was $72,215. The taxable portion of that is going to be $66,694. The reason is because she's single, so that's after her standard deduction. That's how much of her money will be taxable. Okay. The issue, though, is that we have this self-employment tax. That's Social Security and Medicare. Now, that's 15.3%. When you have a W-2 job, you pay half, your job pays half. But if you're self-employed, you are the job. So you're paying both halves. So that's 15% right there, 15.3% right there. And again, like I said, it is on this 66,692. Half of it is deductible, but honestly, it is no consolation when you realize that your federal income tax is going to be another $6,213 on top of that. And then her state taxes, which is 5%, is going to be at $3,611. So that takes her taxes up to $20,028. So it's like 14%. But mind you, this is 14% of the $143,000. Okay. Her after-tax income is now down to $52,187. So at the end of the day, this is the real money that she has to live off of. Okay. That takes her to a monthly income of right around $4,349. So there's this very general, now this is a very, very general rule for across service-based industries. It's called the rule of threes. The rule of three says 1/3 for the house, which means 1/3 for the business, 1/3 for your payroll, and 1/3 for the owner. Okay, so that's the rule of threes. The interesting thing is this number right here is like 36% of that 143,000, right around the rule of threes. So it's a real thing. Now, you can manage those percentages and shift money, right? But in general, right around 49% of your money when you make that commission is out the door between the commission fee, the broker fees, and all the other expenses, not to mention your gas, your mileage driving around, all of that, wear and tear on your car, all that stuff that happens. Unfortunately, all of that goes into play. And so a lot of times, and the reason that we're bringing these stuff up is I'm not trying to be Debbie Downer. What I want you guys to think about, though, is think about this. So think about it the other way around. If my budget for my household, and actually that's kind of what we're about to get into right now. Let me go over this last one. Okay, very quickly. I'm just going to race through this, but at the end of the day, we want you guys to start thinking like CEOs, okay, and not like you own your job, not necessarily like independent contractors. When you're thinking about saving on taxes, okay, you need to think about taxes like rebates. You spend $100. If your tax bracket is 20%, you're going to get $20 back, okay? But if you think about your bank account, that means you still have $80 that's gone. So you don't want to spend on stuff that you don't need or that you don't actually really want. Like spending just to get a tax deduction is like if your spouse came home and said, hey, I saved us $10,000. And you said, oh my gosh, how'd you save us $10,000? Well, all I had to do was spend 40. You would probably punch them in the face or hit them over the head thinking like, okay, you must have bumped your head. Let me hit you again because that math is not mathing, right? So at the end of the day, saving on taxes is still always only going to be a percentage. And so all these people that talk about, oh my God, it's money because it's saving my taxes. That's a lie. The truth ain't in it. At some point, you got to just make more money. You will never save your way to $1 million. I'm sorry. It just doesn't work that way. Okay. You have to eventually just make the money, and then savings preserves what you have, but it doesn't make anything. Okay. All right. So that's my little soapbox on that. A couple other things to remember. Meals are only 50%. So when your colleague says, hey, why don't you treat because, it's a tax deduction for you. Okay, you spend $100, only 50% of it's deductible. So now that 100 is down to 50, you're only going to get 20% of that back. So now you get $10 back and you spent $100. No, thank you. We're good. We'll go Coach. Okay, we're going to go Stag. Yeah, no, we're not doing that. So that's one thing to just be thinking about. Mileage. 40 to 50% of agents miss out on their full deduction when it comes to their auto because they do not track their mileage. And here's the thing. While the IRS may not do a lot of in-person audits, less than 1/10 of 1%, actually I think it was like 1/4 of 1% now, but it's up a little bit. Anyway, at the end of the day, they will send out what's called a correspondence or paper audit in a heartbeat. And that is basically, you claim something on your taxes, they send you a letter. They say, hey, you claimed this on your taxes, send us proof. And if you don't, then they reverse your deduction and they charge you interest and penalties. So that's the way that works. So please keep your mileage log, whether you take the actual expenses or if you take the standard deduction, you still have to have a mileage log. In my experience, if you are a full-time broker, chances are you want to take standard deduction anyway, because the actual expenses probably will not be more than the standard deduction. So in most cases, you guys make out better with standard deduction. I think the price is like 70 cents or 70.25 cents or something like that, 72.5 or something like that per mile. So it's pretty high. And like I said, tracking logs, Trip Log is a really good free one that you can use. Mileage IQ also has a free level. However, I think if you want the option so that it turns on as soon as your car starts moving, you do have to get a paid subscription for that level in their services. And I think that's with both of them. But they do have a free level, and as long as you don't mind turning it on and off, you can get the free level for that. If you already have QuickBooks, QuickBooks actually already comes with one, so you can also use the one that is in your QuickBooks if you already have one. 179 deductions. 179 deductions can be great. I know a lot of people like to use them for auto, and especially in the real estate world, that comes up a lot. The thing I want to warn you about is that that bigger car also has bigger maintenance. It also has bigger insurance. It also has bigger gas. So you could find yourself eating your tax savings with gas, insurance, and maintenance. So just make sure that it's the best fit for you. There are some cases where having a nicer vehicle may be very important to your clientele, especially if you're doing high-end, properties. If you're doing million dollar properties, then that might be necessary in order to make sure that your clients are comfortable as you're driving them around. So just make sure the purchase is about your business and not about the tax write-off. Then structure it to be a tax write-off once you've decided what you want to do based on the money in your pocket. Okay. Then home office was the last one I wanted to touch on. Really, it needs to be regular use, dedicated, and it needs to be distinguishable. So for instance, if I was using this room, and let's say that I had a bed, like almost a bedroom basically on that side, and I have on this side my office, I would want something distinguishable. The interesting thing is distinguishable can even be a carpet. Like if you had an area rug that you put down and you said, okay, everything inside this area rug in this room is my office, that actually still qualifies. So it doesn't have to be a whole room, but it has to be distinguishable from the personal use portion of your home. Okay, so that's the big thing around that. Scenario number one was with her. We said that her monthly expenses are going to be $35,000 a month. However, we already established that she only has right around $4,200 that she is going to have left over each month from her income. $3,500 a month puts her at $42,000 a year. Taking that from the $52,187 only leaves her with $10,187. Now that sounds like a big number when it's all at one time, but think about it from a monthly basis. That's less than $800 a month. Okay. Not only that, it only comes out to be right around 9%. of the $143,000. And if she's trying to save money, she doesn't even have 10% to put aside each month to save. If she wants to tithe, she doesn't have 10% to put aside for tithes because this is all she has left. So now what we want to do is we want to flip this on its head, and we want to look at it from the other way around. Well, I'm sorry, let me hit the reserves. So you do want to put aside reserves. You want to have 3 months of expenses, not 3 months of income. So her income was 42, but her expenses were 35. So we're going to do 3 months of expenses for her personal, but guess what? We're also going to do 3 months of expenses for her business, which was the $6,972, which was on, I think, third slide. What this is this setting up a reserve. It's kind of like with the Dave Ramsey program when they tell you to set up so much in reserves. So this would go into a savings account. Actually, if we're using the Profit First model, once we get a certain amount each cycle, then you would actually move this into like a don't touch account. It is a totally different bank from your regular banking. And the whole goal is to keep that money in reserve and to make it inconvenient enough that you have to think about it before you get to the bank. So for instance, mine's at Navy Federal. Well, I don't have a bank card for Navy Federal. I don't even know the login. I got to look it up, right? But if I want to pull money out of my Navy Federal, I got to drive like a good 20 minutes. So I got 20 minutes to think, do I really want to pull that money out, or am I going to let it sit because that's supposed to be my emergency fund, right? And so this is money that is going to go into that emergency fund. It also is money that helps you out so that when you are in a dip, you still have money to pay your bills. In this scenario, they said 1.7 years, but that's her using all of her discretionary money, which is not really realistic, right? Because cars break down and children get sick. I mean, granted, she's single, but she might have a niece or a nephew, right? Or she might have a parent that she may have to help out, right? So life still lives, even though you have a plan. So I really think, unfortunately, the 10% that they are talking about is not realistic in this scenario. This was meant to be an ideal scenario. So, but my thing is, you need to find the number that's comfortable for you. That number might start out being 1%, and you might raise it little by little, and then eventually you get to 5%, and then you get to 9, then 10, right? But as we're going to talk about in the next slide, there's also a way to plan. Okay, so her annual living expenses. So now in this scenario number 2, we're going to say if her annual living expenses were $36,000, her after tax is $52,187. That leaves her with $16,187. In this scenario, she just reduced her amount that she's spending out personally. And so by doing that, she was able to increase the amount of money that she was able to put into her reserves, and it allowed her to build up her reserve faster in a year rather than 1.7 years. I do think as an initial goal, building up your reserve needs to be your initial goal before you look at quote unquote building your business, because even when you're building your business, there's going to be ups and downs. There's going to be times when you're going to need that reserve, and if you don't have it available, then it's going to be really hard to stick to your guns and do what is necessary to grow, because the reality is growth hurts. It's not comfortable. Ask any preteen. It's very uncomfortable. It doesn't feel good, and so unfortunately there's going to be ups and downs. And so if you want to be prepared for that, you really need to make sure that you have that money put aside. Now, in this scenario, we said her budget is going up. It's at $4,000. And this would actually make it so that it would take her 4.5 years to get that same reserve if she were to increase the amount that she is spending. But not only that, she would actually have to increase the amount she's bringing in. And so, but here's the thing. So this is what I was talking about, engineering this backwards. So if she says that she wants to have spending money or her home budget at $4,000, she works it backwards. She says, okay, 4,000, that 4,000 is right around, we said 36 point something percent. So now we divide that backwards. That tells us how many sales we need to make. Well, for her, she needs to make 2 extra sales because she needs to sell $733,000 more. She needs to increase her income by 22, divide that by the 3%, that's $73,000 in additional sales volume. That's 2 additional sales at $348,000 per sale. So now she's working the numbers backwards. She's saying, this is what I want for my home. So now divide that by my 3%. This is how much in sales I have to make. Then take that back out. This is how many houses at this level I have to make, or I have to get a higher clientele. So I have to target a higher clientele. Now, that doesn't mean I can't still help the average middle-class family, but I may have to mix that up a little bit and have some high clients as well as some lower clients, because or if I'm just really cranking it when it comes to middle-class families, then I have to increase my marketing. That means I have to increase my presence. I might have to increase my time in social media marketing. I might have, there's things that I may have to do in order to get that number up so that I can get that extra sale so that I can make my numbers. Now, taking an S selection can save you money, but at the end of the day, the short answer is S selections save you money by saving you on the Social Security and Medicare component. They do not save you on the income tax component. They only save on the Social Security and the Medicare. In her scenario, if she were to take an S selection and then give herself a owner's salary of around $30,000 a year, she would end up saving somewhere around about $5,600 in Social Security and Medicare that year. At the end of the day, the goal is to get you guys to have stable businesses, not just jobs that you own, and not to be thought of as a contractor, but as a business owner. We want you guys to not react to your income, but to plan your income out. So to actually take that time to figure out what your actual household budget is. And my thing is, when you're thinking about that household budget, don't just think about your bare necessities, right? Think about, well, I want to do at least one vacation where I go and visit my mama, or I want to, nothing extravagant, but just think about those things that you want and then work your numbers backwards. Then from there, you can create your budget of what you want to see happen. And then it's the tracking component so that you can track what's happening to see whether or not you're hitting your numbers, or is it that you have to, you got to put in more sweat equity, you got to put in more time on social media, you got to put more cards, you got to make more phone calls, whatever it is that, is your methodology for bringing in new clients. And there's a couple of other books that I can recommend that really do help with giving you really great ideas that are really kind of like not common. That could probably actually really help out as well. So if you have any interest in that, then definitely let me know. So if you have any specific questions, especially if you have any specific questions around tax or whatever, just let me know. I'll be more than happy to